What's up guys, this is Sean and welcome back to the iherng podcast, and today we will answer a question from email. This is from Chiu. Hi Sean, I watched one of your YouTube videos which lead me to more doubts in investing in property. In your video, wait let's see what video is this. So the video is about Asking Sean episode 251, definition of a good investment property. Just to have some context lah. Wow, we do so many episodes already leh. Anyway, you mentioned because many developers already pandai, so the flipping game is hard to play. Instead, you suggest investors should play the equity game like you did. The method is to let tenants slowly pay off the property over 30 to 35 years, best case rental cover installment plus maintenance, and eventually the unit will be fully owned. My doubt is this: in reality, most apartments will already be so bad in condition after 15 to 20 years. And there are always newer projects coming up. Who will still want to rent or buy a 30 to 35 years unit? Wouldn't the rental and resale demand drop significantly or stagnant? Also, if the positive monthly cash flow is only around 500 to 1000 and could even turn negative during vacancy or repair periods, what is the real end game for holding multiple units long term? My main question is, I don't understand your purpose of fully owning so many properties even though fully paid or theoretically by tenants after 30 to 35 years. What's the point of owning them if you can't rent or sell out by then to make cash? All this while I was thinking the investment strategy is rental more than installment plus maintenance. After 5 years, hopefully got appreciation, perhaps 100,000, then sell out. And the 100,000 is the end game. But now you're telling me appreciation equals to flipping game is hard to play. Hope you can help clarify. PS, the project I'm aiming to buy is SJCC East 1, the 2-bedroom unit, which I think rental is very strong, but exit strategy might be worrying. What do you think? Okay, what a great question. First of all, what a great question. I think the gist of the previous video is about people asking whether can you buy a property and flip, because that was the flipping game that every property investors play. Flipping game now, I think it will be way harder because developers all know how to price in already. They know how investors think. That's why most of the property are overpriced. Well, that's also because of COVID. During lockdown, the period was extended beyond the anticipation of everybody. That's why many projects got abandoned, almost all projects got delayed. And that's because they didn't buffer in that uncertainty. And after the lesson of COVID, now, developers or contractors have more buffer within their feasibility study or their costing mechanism just to be sure again that they get to complete the project on time. If not, most of the projects is either they lose money, they abandon straight away. Some they can still afford to lose money, but they are late. That's why a lot of customers still complain, and some just break even. And if you can break even, it's already a huge success. In that case, the game that I suggest everybody to start playing is when we buy property, the best way is to have rental higher than installment, also plus maintenance, so you will have a positive cash flow game, and you just hold until the end of the loan tenure, which is 30 to 35 years. So you fully own the property. However, for Chiu here, he does not agree. In his perspective is, by getting a property in 5 years time, you sell and you get 100,000, that should be the end game already. No right, no wrong. I just think that it's a different level of thinking. And I've given this a lot of thought actually. So let's say, as an example, okay, just take as an example, right? My Mont Kiara unit, which is the oak above the Sunway 163 Mall, okay? When I buy, it's about $1 million, which is about 3 years ago. My monthly installment is about 4,000 now. There are viewings that are taking place, and if everything is good, the estimated rental is about 5,500 to 6,000. If let's say I'm very lucky, I get the 6,000 one because my unit is actually very, very nice. Let's say 6,000. So 6,000 monthly rental, while my monthly installment is 4,000. Indirectly, the end game should have happened already, so I can sell already, based on your logic lah, right? And a simple mechanism to think about is whenever we have extra 500 in positive cash flow, we will make about 100,000 in equity, because for the next buyer to buy, even if they pay 100,000 more for the property, they can still have a rent that can cover their installment. And when you go into the market and ask any investor, hey, anybody who wants to buy a property when your renter can immediately cover installment, there will be a lot of them. However, for us, we would want more. And for this particular deal, a total down payment is 0. And renovation fees is bare minimal. And if I were to sell today in the market, it's about 1.2 to 1.3 million. And that is perfectly justified if the rental rate is 6,000 today. Okay, so let's don't want 6,000, let's take 5,000, right? I could easily still sell at 1.1 million. And here comes the debate. Let's say if I do so many things for 2 to 3 years, I earn 100,000. How much is that 100,000 based on the total deal? That's number one. Second thing, what do I do with the 100,000? So for a 1 million property, you earn 100,000 is 10%. Is it good or bad? Entirely up to you lah, right? But because property has always been a game for the very, very long term, even transacting it takes about 6 months to sell or 6 months to buy. That's the bare minimum. Is it then worth sourcing the deal for about 2 years, finally found one and make it happen? Then it took about 3 years to make the deal happen and immediately I want to cash out for 100,000. The answer depends on how much you have as a person. If your savings is only 50,000, that 100,000 is a big deal. But if you could have afforded that deal of about 1 million already, this 100,000 might not be significant enough. And that comes with a few concerns actually, because if you really get 100,000 today, it then becomes another set of problem, because now within the community, we are worried about inflation rate. So a very nice question also everybody can ask, right? So since we're in the end of the year already, what do you think it's the true inflation rate, which is the true inflation rate? Authorities or the government may say that it's about 2 to 3%, but my KOPO index is about 10%. I just came back from Singapore visiting my brother there. Malaysian ringgit feels very, very small. Although after strengthening, not helpful at all. So if you check internationally, the number is about 10 to 12%, depending on your lifestyle. So let's just take 12% to paint the picture. If I do nothing with the money, and if I just put it into EPF, I get about 6%. And that is very, very high already. I'm very grateful that Malaysia has EPF already, okay? But I'm still losing about 6% per year on the value of money. Whatever that I can buy with 100,000 today, I cannot buy with the same 100,000 next year and years to come. Unless it's EV lah. So EV, once you buy next year, it's about 50% drop in value. Then can lah. but you get what I'm saying, right? Everybody thinks that buying property is to be rich, which is a very, very wrong concept. Property investment will not make you rich, one. Property investment keeps you rich. And the main intent why property investment has been a favorite since last time, right? It's the main characteristic of hedging against inflation. So a question to ask here, would you have 500,000 in cash or 500,000 in a property format? Back then, before there was e-broking, there was only stock market where you need to call the remisier, gold, forex was illegal, and property. There's nothing else to invest our money in. Therefore, property has always been the mainstream investment channel. And a lot of people would choose to have their money parked in a property instead of cash. Why? A landed property that I see in Subang Jaya, let's say, today is 500,000. Let's imagine 2 years down the road. Next year, I may not be able to buy the same house anymore. But the proper way to think about it is the knowledge and the skill sets to grow the money that you have. Let's say if I were to give you 500,000 today, can you grow the money faster than inflation, which is minimum 10 to 12%. Everybody first answer is, oh, I just put into EPF is 6%. You still lose value. So how? And as per your argument where you say most apartments will be in bad conditions after 15 to 20 years. This one, not entirely true, but let's move on first. There are always new projects that comes out. Who will want to rent or buy a 30 to 35 years unit? Wouldn't the rental and resale demand drop significantly or stagnant? Again, back to Mont Kiara. If you base on your theory, meaning the worst unit in Mont Kiara is worthless, do you think so? But when they started, maybe their price was like 380,000, 420,000 20 years ago. Now, the same unit, if it's a new launch, it will be about 2 million because last time the units are bigger, the build up is bigger. Facility wise, not as great, but if you have checked out the conditions, I still don't mind staying one. However, the Oak, which is the one that I own in Mont Kiara, rental can go up to 5,000, 5,000 to 6,000 for a 700 to 800 square feet unit. 2,500 square feet one, guess how much their rent will be? 2,008, but their monthly installment has always been 1,000 plus only. What I'm trying to say is we still need to think about yield. New units will be more attractive, you'll get more all the new tenants and things like that. That's why when we invest, there's a rule of new versus old. But let's finish this yield part first. With the current rental rate, the yield versus their current selling price is still about 5%, 5.5%, right? Which is very, very healthy already. But if you dial back on the price that they bought 10 to 20 years ago, it's a very, very high yield number. But does buying new then will guarantee higher yield? Again, not necessarily. It's still very location specific. It's still very management specific. That's why we need to look at 20 different properties. And who will want to rent and who will want to buy? If you look into the rental rates, if you look into the selling price, there's still a lot of people who want those units because not everybody can afford the latest units. And this is also speaking from your very own personal perspective. No right, no wrong. It's just that I think this is your very first property and you are very, very young. That's why the question kind of indicates the missing link of the society. Not everybody got no money one, you know. And not everybody wants to buy new projects one. A lot of people rather buy sub-sale units because they have more value. And the argument is this. A lot of youngsters prefer new properties or project directly from the developer, not because they like it more. I would argue it's because that's the only thing that you can afford because you cannot afford sub-sale, you cannot afford auction. Because you need about 15 to 20% down payment. And that's why I always say that the current buyers, first-time home buyers, are very, very lucky because we have a government that is actively pushing home ownership to all Malaysians. Again, back when I was at my first property stage, to own a 300,000 property, I had to pay up about 40 to 50,000 just to gain ownership of the particular property, and that was when 22 or 23. If you turn into today's case, let's say if you want to buy your particular project at 700,000, you need about 18% in cash, which is about 126,000. If that really takes place when a lot of property developers cannot give discounts anymore, I think the market will collapse. And that is also why for new projects, it's almost impossible to have equity gains in the first 5 to 10 years time because upfront you already have all the enjoyment of discount rebates for easy ownership and things like that. That also leads to a lot of auction units being available in the market because everybody thinks that owning a property don't need money so I just sign the booking form and that's about it I can qualify for a loan, that's about it, right? But when you really come to the installment period, suddenly I cannot pay. My income is high but my expenditure is equally high, so auction lelong. And also because you are lacking in terms of experience, again, this is not a diss, this is just my observation from your email. If the positive monthly cash flow is only 500 ringgit, what is the real end game for holding multiple units long term? First of all, a positive cash flow of 500 to 1,000 a month, meaning on top of your maintenance, on top of your installment, you still have about 500 to 1,000 a month, right? That's a solid purchase already, you know. But arguably that applies if you buy new projects and you still get so much positive cash flow. If you buy sub-sale, then it's pretty easy because you already put in down payment of 10 to 15%. And to illustrate better, let me share my perspective or my own example, right? So to date, I cannot tell you how many properties I have because I still want to buy. Let's assume I got 5, okay? When I buy my first property, then it's break even, meaning the monthly installment is covered by rent. Then every year I will lose about 1.5 months to 2 months in terms of installment amount for agent fee, for repair fee, for whatever miscellaneous and things like that, right? With the rental income from the property A, it allows me to qualify for more loan for property number 2, which is B, property B. And the same thing happened, I go to CDE, right? So CDE, I can have different buying channels. Some I buy sub-sale, some I buy from bulk purchases and things like that. Okay, so let's say I have 5. Again, based on personal experience, when I am 52, it will be a very important age because I will start owning property in full, meaning the property will 100% be paid and I fully own it. So my estimation is, even if 5 of this property has 0 capital appreciation. A lot of people will argue, hey, you know, you take a 300,000 loan, right? In the end of 30 years, you will pay about 600,000. I'm okay because what's my payment? I paid about 1 month to 2 months installment in a year. So let's say 30 years is about 60 months. 60 months is about 5 years. So I paid about 5 years in terms of that 30 years loan only, and I own the whole thing now. So now net worth wise, I'm worth, let's say, the same amount, which is 300,000, 300,000, 300,000, 300,000, 300,000. It's 1.5 million already, 5. But realistically, let's look at capital appreciation in terms of median price for Malaysian property. Averagely, it's about 3 to 5% for landed properties, 1 to 3% for high rises. So if your portfolio is a mixture, then let's just take about 2%. So 2% per annum, what would be the value in 30 years time? And then going back to your argument, but who will actually buy your property when it's cheap enough? When my neighbor lot with the current construction costs, current taxation system, current labor fees, current material costs, compared to the most modern building in the city, mine will be attractive in terms of value because the build up is bigger and things like that. And here I do have a choice. I can choose to sell to liquidate the property, or I can just collect rent in full. And let's say if it's a 300,000 property and now my current rent is about 1,500 for a unit, let's take 5 units which is 7,500. Last time 7,500, almost 90% is used to pay off all the installment. But after 30 years, this 7,500 is fully mine every single month. And the most beautiful part is this. The property investment works passively. I'm not saying that it's a passive income, but once you buy a unit, you get it furnished up and you rent it out, most likely you will work about 1 to 2 times a year on the property unit. One time is when the tenant wants to leave. Second time, you get the unit clean up and rent to another new tenant. So a year you will work on a unit maybe once or twice only a year. Then what do you do with the rest of the time? We get to focus on our main income, grow it like mad. Then we can also use the capital that we have onto other investment asset of your own preference. Stock ke, index fund ke, crypto ke, Pokemon card ke, whatever you like lah. Because property is built on what? Credit, not my actual money. So by using 0 of my own money, I get to build, in this case, 5 units of 300,000 each, right? I get 1.5 million. Leveraging on what? Tenants' money, tenants' time, bank's money. None of mine. I merely just coordinate the deal. What's the risk then? Risk is when we overpay for it, means that every single month it's bleeding. Then it will be a trouble. So now it will be taking away flexibility of your of your income instead of complementing it. That's why in the channel I emphasize 2 things only. Always compare our purchase price to the median price of the location to never overpay, right? The second thing is rental yield. So I personally focus more on the second one. As long as the property can be self-sustaining, it's all good. By the way, there's no hard rule that I must hold it until the end on. There's no hard rule. So let's say maybe my kid is a genius, then he gets to go to UK under scholarship and the whole family decides to go. I can get to just sell out all assets and migrate over. No big deal. But the thing is this. What if every single property of this after 10-15 years is giving you 2,000 monthly positive cash flow? Why would you want to sell a property that is making money? Because the concern now for a lot of existing property investors or owners is after they sell, they couldn't get another deal of equal quality anymore. Back to my example of my Mont Kiara unit. If I were to sell at 1.2 million today, what do I do with the money? When it's self-sustaining, I don't have this concern at all. But now with extra 2 to 300,000 in a bank account, I need to do more homework, whether to grow it in stocks, grow it in assets, grow it in bonds or gold or crypto or whatsoever. Instead, it could have been just nicely in the format of a property that is growing steadily about 3 to 4% a year. And the best thing is, for residential properties, after 5 years time of holding, I don't get any capital gain tax. And personally, I've learned this. Finally, I understand why rich people don't prefer holding cash. They prefer holding assets because it hedges against inflation. So now when you sell already, you have the 300,000, right? Inflation is no longer on your side. It's now against you. The best thing about being a property investor is we really love inflation one. Like with the current restriction on the lorry loading and things like that, right? Concrete price shoot up. Is it good or bad? If you haven't bought any property, then it's terrible news for you. But to existing property owners, very good. If interest rate drop, all property prices will shoot up again. Is it good or bad? As an owner, I'm good. Minimum wage increase to now maybe 2,000 next year. Is it a good thing? Good, because the cost to build a new property in the same location, same build up, is only going to be higher. And after having that clarified, that is going to be the main difference as well between buying a property for own stay versus investment. If you buy a property and rent out to people, it's an asset. But if you were to stay together, I would argue that you didn't really earn any money. Example, just to paint the picture clearer, right? If you buy a 1 million property today, then you stay there for 30 years, okay? 30 years later, you sell the property for 2 million. Did you make money? Technically, from the amount, whatever that you pay to the bank is also 2 million worth. So in terms of the buying and selling for the property, you didn't make any money. But what you earn is the monthly rental rates that if you didn't stay in this house, you would have to pay some other landlords to be using their space. In that sense, in that 30 years time, you stayed for free, but you get to enjoy the certainty. You're going to do whatever you want with the house lah. Also for a landed property, it's kind of terrible if in 30 years time you merely double up, because now for landed properties that we see around the city, easily is about 8 to 10% increment in value. Whether got people buy or not, a whole different thing, but in terms of bank valuation, is there. So I think the main confusion here is a few things lah, right? I think to you, in your belief system, 100,000 is a huge chunk of money. I agree, right? I agree, and I hope this will apply to everybody else. I hope you guys will reach a day where 100,000 is a very normal thing only because of your investment scale and your investment size. Why I like property is because it allows me to build from 0 to 10 million securely, slowly but surely. It means I get to leverage on people's money, people's time, tenants' money, people's knowledge. I merely need to make ends meet every single month and I'm all good. In 30 years' time, I will be owning the SPA value in full. That's my own belief system. Realistically, I will be earning more, but that's just the bare minimum. That's how I calculate my net worth also. And let's say you reach a day where you have 100,000 in cash. Do you use 100% of it and dump it into a property for a down payment? I wouldn't agree also. I would rather use credit to buy property and use our capital to invest into something else. Why? If you think about our bank interest now, what is it? Maybe 3.55, the latest one I see from public bank. If you combat that to the inflation rate, isn't it more sensible to use people's money for investment? Then I put my own money into something else. Even if I put into KWSP or FD or whatsoever, it depends on how much you have lah, right? It can go up to 4% to 6%. And all this will work only when the property that we buy, even with 0 down payment, the rental can cover installment. Okay, that's the magic rule, the magic condition. If the property is bleeding, where the rental can only cover half the installment, that is a whole separate issue altogether. In the first place, why did you buy lah? So that is why throughout the entire channel, the main condition that sometimes we take for granted, right, for not mentioning, rental must cover installment in a zero down payment basis. That will be a very strict rule on it. Because it's easy if I were to put in 50% down payment for the rent to cover installment, right? Doesn't make sense, And I hope this clarifies your question a little bit more. Hopefully you are not as confused anymore. There's a difference between being cash rich and being equity rich. Having cash, after a certain number, it will be burdenful already because you will need to constantly figure out how to beat inflation. And just so happen we are in Malaysia right now and we are the second strongest currency right after Vietnam. If we are in other currency, the depreciation rate will be worse. So like for a lot of countries, their currency don't even worth anything. They need to use US dollars or they need to use yuan. So in Malaysia, we are still lucky because our political stability is there. We kawan with everybody. That's why when you reach a certain level, which I wish upon you as well to reach that level as soon as possible, to be concerned of having more assets, not more cash. Then the next thing is 100,000. It might be a big amount to you then, but we always need to tie back to how much is vested. It means that what's the percentage of this 100,000 to the original investment value? If you buy a property that is about 300,000, which is like my Puchong first apartment, right? I bought it at 330,000. Now it's worth about 430,000. A lot of people think, yeah, that 100,000 so small, what are you going to do with it? But in actual fact, it's about 33% increment there. That's a solid purchase. Means I used about 50,000 to buy the property, and in about 10 years time now I cash out about 100,000. So with 50,000 I earn 100,000. Is it a good thing in 10 years time? Okay lah, not too bad lah, right? Considering all the installment and interest rate and things like that. But if I were to buy a 2 million property and I earn 100,000 in 5 years time, quite a loser in my opinion. So you get what I mean? So that needs to be painted within the same context for a better comparison as well. But I really like the insightful question that you have. It's a genuine question, I do understand. And how I wish somebody at this level trying to explain to me when I was buying my first property. Because now the main difference is this, you guys have a lot more options in terms of investment. With the same amount of money, let's say I got 10,000, I can put into so many different formats of investment. Robo-advisory lah, Versa lah, gold lah, stocks lah. Not only Malaysia stock, I can buy US stock lah, buy Hong Kong, China stock also can. All from the phone. So easy. But the tough part is not investing lah. The tough part is to have money to invest lah. Right? So again, hope this clarifies. Wish you all the best in your next investment. My suggestion is this, to look into more different options first before making that decision, because only by seeing more other options, right, from different buying channels as well, only you get to know that you are really buying the right one. In other words, is to make that informed decision. Okay? And I wish you all the best. Thank you very much for asking. Hopefully this is not very harsh. If it's harsh, that was not the intention. Because I always get this feedback a lot just by painting the real picture of what rich people are really thinking, right? Oh, just because they are rich, they don't have to care, right? No, it doesn't mean that I'm looking down, because I started from there as well. How I wish somebody pointed me to the right way. Don't be too concerned of cash. Build the asset first. And I guess that's all for today. Thank you very much for watching. For those who still have any questions regarding real estate, do just email me at taniherng@gmail.com, or you can just DM me on Instagram, iherng, and I'll see you guys on the next one. Ciao.